Good afternoon, good evening, wherever you are in the world today. I hope you're absolutely fantastic. So let's continue from what I spoke about yesterday in terms of dropping down new cycles onto the various different markets. To take it a step back, as I made mention to, MTOPS, which is my strategy, works on all markets across all time frames. So this gives me the freedom to move across to new markets, as well as give me the freedom to work on all time frames, right down to the sensitive ones, which I'll get to in a second, and also to have clarity of what the market is trying to achieve on the higher ones, which gives me the guidance that I require to really master the lower time frames, which if you've tried day trading can be quite tricky. So building on from yesterday's video, we covered the cycles, and now what I want to speak to is working with turning points. So in a market, price is going to go up and price is going to go down. Sorry for blowing your minds there, but really, like that's just the way the markets operate. However, a lot of people get quite fixated on a lot of stuff that they shouldn't. So just bring it back to my point, we make our money with the move up of the market, and conversely with the move down in the market if you're at the stage of shorting your position, which a lot of guys have got to, especially if you've joined in the crypto bull run in 2017. Anyway, so why that dials into today's kind of talk is because the position of where the ups and downs happen is vitally important for you to maximize and optimize your profit taking from the game we call live markets, right? So if you can buy the low at the right point and sell the high at the right point, you're pretty much winning this game. So the next question that builds from there is, how do you identify ahead of time where the low and the high is going to form? Well, there is something that exists within the market cycles, what we covered yesterday, that is called turning points. All right, so turning points, the clue is in the name, is where the market turns around at. So the way in which turning points operate within a market cycle is that it contains 5 highs and 5 lows within the cycle. So that now takes away a whole bunch of guesswork as to how many turning points are coming up near, and how saturated or elongated a market is, because once you let that principle land, you'll be able to distinguish what a false turning point is and what an actual turning point is. So a good example is this. So price dropped down and ran up, dropped down again, and because of that pattern, it looked as if there was a high and there was a low. But in reality, that's not the case. That was the high, that was the low. Because we now know market spacing and how many turning points form within the market, this was the actual next high. And of course, this was the actual next low. And by being able to distinguish what aren't the highs and lows and what are the correct highs and lows, we're able to bring upon something that is so powerful in trading the markets, and that is market structure. So once you've got market structure, forecasting the future becomes way more attainable and something that actually becomes rather enjoyable, rather than the other guys going through their pains and having the live markets become a burden and quite an uncomfortable part of their day. So to work with the recent turning point, after this turning point, right, because we got 10 in a cycle, so we got the first low followed by the next high, the next low. Now we're ready for the next high to turn around. We're going to put our marker down. And so let's connect that low transition to this high transition. Okay. And now that we've got this market structure, and we can see how much space within the cycle is left, we're getting a better understanding of how much further this market needs to move before it goes into it says I'm offline for some reason. Let's hope this video doesn't bomb. Anyway, so now we get an understanding when it comes to market structure that we've got to fit in another X amount of highs and lows within this market so that the market structure is completely set. Okay, so I want to stop there with the fear of the loss of this this video, because it feels like things are restarting and I don't want to lose the content. But that's pretty much today's lesson alongside the markets of how to build out your market structure. Okay, this is very, very good information. It took me many years to discover it and many fails to discover it as well. So just skip to the end, and if you want to bypass a lot of the initial headache that so many traders have to face, then my recommendation is take what I say to as the way, because again, I'm just fast tracking you through the pain of what doesn't work and delivering and giving to you for free what does work. All right, so that's the kind of TA class over. When it comes to trading itself, I also want to build on what I was speaking about yesterday in terms of day trading versus getting lost in the hope and hold. Let me just close this. No, actually, screw it. I'll leave my Dow Jones position open. The hope and hold. What is the term for it? The hope and hold disease that a lot of crypto hypists push upon new entrants to the markets so that those fools can pay a higher price than they did, and therefore they can profit from it. You can check it out for yourself. Warren Buffett himself says that an investment is putting your money in to a cash generating asset, and anything other than that is not classified to his definition as an investment. So to him, he would invest in a farm because it's a cash generating asset. He would invest in a business complex for a medical center because that's a cash generating asset. He would invest and so on. I hope you kind of get the pattern there without me having to provide more examples. Now, when he offers his opinion to Bitcoin, for example, and sure, it's run to 60 and 70,000 and all that kind of stuff. That's great. But it doesn't cross his desk as an investment because he sees it as the fool paying more than the other fool structure. So that's why, if without having to kind of draw that out even further, I don't really believe in the hold and hope environment. Sure, Bitcoin's done really well over the last 20 years, and well done to him or it or whatever. But if you look at so many of the shit coins that just dropped 90% in value after the ICO initial coin offering, and leaving so many people derelict and broken, it's just not worth the turmoil. So the cryptosphere is still in its infant stages in comparison to the rest of the markets. There's this cowboy attitude inside there. Quite frankly, I don't like the people that are in the cryptosphere either, because they're quite arrogant, ignorant, and bratish. And it just feels like immature teenagers got onto this platform, and because it's kind of in its infant stages, everyone's opinion somehow matter to a certain degree because it's still all very new. But I just feel the wisdom was absent. So amongst all the other stuff, I'm quite glad to be walking away from Bitcoin for all the mentioned reasons, but also because with these other markets that I've been slowly identifying one by one, let me just take it a step back quick. I used to believe gold, Bitcoin, and the Dow Jones were the power combo. I've since dropped gold and I've since dropped Bitcoin. And I quite happily can say that these mature markets, the Germany 40, the Dow Jones, household name, power market, and the Euro JPY, which is my new favorite of all time market so far, is outperforming my crypto enjoyment. I can't even compare, because now that I'm approaching 40, I've got 2 kids, I've got 2 Labrador dogs. Basically, bottom line, now that I'm like a dad and mature, and I'm not here just to make money to buy a PlayStation or whatever the kids are doing out there. I'm here to provide a lifestyle that's going to be longevity based, and so forth, for the well-being of my family and beyond. I care about different things now. So Bitcoin, although, I mean, you might as well just hold in hope and see how that goes. I'm sure some guys will benefit. A lot of guys actually just panic sell out of it. As many people I know got in at 66,000 and then saw it drop down to 30,000 last year. They sold out because they're just like, what a scam. And then they had to watch the pain of it go back up. So I want to close the door quick because my kids are here. To 60,000, and then there's just too much pain involved there. So the hold and hope didn't work out for many good people that I know personally out there, which is another reason why I'm just not a big fan of the cryptosphere anymore. Whereas here, I mean, this is just from today alone. Like, some guy on the comments said, "Wait until Q4 for the Bitcoin run, or whatever." I've been in crypto for 7 years. I've been in markets for 7 years. I've waited in December for runs to happen, and nothing happened. I made life decisions based on potential runs, based on previous years, and nothing happened. So I'm very much not on board with disappointment anymore. What I am on board on with is these runs right here. Now, I don't need to wait for November, December in crypto just to see a decent run up. All right. This is just from 8 a.m. today. If we look at the time bar at the bottom, this is the same day. This is today. All right. So look at this run all the way to there. All right. Go out for lunch, take a breather, little move up. You're lucky to have got this little move. Okay. Maybe you missed that one, right? Okay, building up again. Let's get in, bang, all the way up there. So of this day, if you made 2 of the 3 trades, look at that. That's thousands. I mean, if you just look at the bottom right over here, this is just an open trade in the afternoon. It's not even my morning trades, and this is already approaching 700. Okay, so now we're talking about over $1,000 realistically, not pie in the sky, not unsavory or what's the word I'm looking for? Irresponsible, legitimate, locked in profit. Doesn't even have to be the entire run. You can open a position, close, miss, open again, close, and you would have been looking very good. All right. Let's say, for example, you want to do a bit more trading as the day progressed. Let's say you missed the initial impulse. Okay, it came down. You saw it build up again. It's okay, this is me. Bang, look at it go down. All right. I'm sitting at $900 just on this one move alone. Do you guys get it? Wouldn't you rather want that for your day to day than this? I don't know. Let's have a look at Bitcoin, I suppose. Let's compare. I mean, is there a comparison? Is this what you want for your life? No. It's not, is it? And if it is, then there's different strokes for different folks. So, and that's totally fine as well. Whoops. For me, this is the German indice. Look at all the earning potential in one day, all the way down. You don't have to get it perfect. You can get in late, exit early, still be profitable. Exit late, enter late, exit early, still be profitable, take a break, profitable. So have a look at the Dow Jones. Oh, look at that. Profitable, day on day. And if one's not performing, then the others are going to step in and help out. All right, so that's kind of just to back up a point, to speak to a number of the comments suggesting that, the crypto diehards are going to stick with their Bitcoin. Guys, I'm not. And if you are, good for you. But for the reasons I've made mention to, this is what I'm about. Again, I'm a father. I need responsibility. I need mature markets that are backed up. I need buyers that bring orders to the books. I need a good shape, a good continuation. I need active mornings. I need active afternoons. And when, let's say, for example, the JPY is taking a break, maybe there's a bank holiday in Japan or something to that effect, I've still got America raring to go. And if they're not wanting to move the markets, then I've still got the Europe market ready to go. The top 40 companies in Germany, which is a European economic powerhouse, to provide for myself, my family, and for my trading career. So that's pretty much an in-depth backup to some of the points I was covering yesterday. So hopefully that brought on some clarification. Whether you agree with it or not, that's irrelevant. And that's not a full stop. That's not irrelevant. That's okay, because that's not the main topic of this video. The main topic of this video is the amount of highs and lows that exist inside a market cycle for you to anticipate whether or not there's going to be a high or low coming up soon. And if you would like to learn exactly where to locate those highs and lows from a time and price perspective, reach out to me. Believe it or not, I have a course you can buy. But if not, then just stay close to my work, because a lot of my stuff I give away for free because I care about the community, and I care about TradingView as well. I didn't even realize, just to close the video off, I didn't even realize that I'd made editor's pick again. I just thought I was getting a donation. So when I went to donations, I saw that I got 200 coins. I was like, wow, TradingView is obviously watching my content. That's super cool. And then when I clicked on it, it opened up. That didn't work out. Can I go back? That actually, when I had a look at the comments, it said here that this publication has been chosen for the editor's picks and will be featured on the front page. And I was like, what? I made front page in August, which is last month. And so there's no ways I could have made front page again. And there it is, 23rd of September. So thank you so much, TradingView, for the support. Thank you so much, guys, in the community, for the support. I do it for you. And the reason I'm bringing it up is not to pat myself on the back, even though it is a massive accolade. It's because I'm offering wisdom that should be at the price tag of thousands of dollars for free. So don't just forget about or ignore what I'm saying. Try, take notes, try and implement it, try it out for yourself. And if you have any questions, reach out to me, and I'm willing to guide you through. All right, that's it for today. I'll catch you on the next one. Ciao for now.